Hello everyone, it's Khaled. This is the Daily Pitch International Breaking News section, and today we will be discussing the FOMC Minutes meeting. If you haven't liked and subscribed to our channel, let's do so and move directly to the economic calendar. As we can see, in February 18, we have the FOMC meeting minutes. To start with, FOMC meeting minutes is not an actual meeting. It provides an in-depth insight of the latest FOMC meeting that took place. So why this is very important? Usually investors look at the FOMC minutes to see if there are any additional details that were not mentioned in the previous meeting, and this could give us an insight either to the economic situation or what to expect from the Feds in the future. During this FOMC minutes, we will be discussing or looking at certain points and see how this will impact the dollar index DXY. Of course, in the last meeting, we know that the Feds kept interest rates unchanged at 3.5, 3.75. The voting there was slight difference. 10 members voted that interest rates will stay stable, while 2 members, Stephen Miran and Waller, preferred to see a rate cut or lower interest rates. One of the most important things that was mentioned in this meeting, that the economic tone, it was upgraded from moderate to solid. Regarding the labor market, the Feds believe that it is not worrying, the job market will not collapse. They see it as stabilized. And regarding the inflation, they mentioned it several times that it is still somehow elevated. Later, after the meeting, of course, we have Jerome Powell's speech, which is as important as the meeting itself. He signaled the wait and see. That's normal. They are data dependent. There is no rush to cut interest rates. And he suggested that they are currently near the neutral rates, and let's keep this in mind. As for the economy, he said that it is surprisingly strong still. Regarding the tariffs, he said that the tariffs could keep the goods inflation higher, but expects the service inflation to drop. And regarding the labor market, they said that it is currently at 4.4%, and this could signal that there is still healthy in general the labor market. For this minutes, what to watch for? Couple of points I will be looking at regarding this minutes. Number one, why did Waller and Miran prefer to see lower interest rates? In general, Miran is related to the US president, which is one of the members who preferred to see lower interest rates. The question is, why did we see Waller asking for lower interest rates? And for the neutral, it is very important to try to understand, are more members started to think that rates shouldn't be lower than 3.5 or 3%? This is very important. Regarding the fiscal policy, in case we have any news regarding the fiscal policy, and specifically regarding the one big beautiful bill stimulus that the US president made, and in case we will get any forward guidance for the upcoming meeting. How all this will be affecting the US dollar, let's move to the chart and look. Looking at the dollar index, we can see that almost beginning of last week, it was just consolidating in this range. Although we had some important economic data from the labor market and the CPI inflation data, even the retail sales, but we can see that we are stuck in this consolidation. The first scenario, in case we get any signals from the FOMC meeting in minutes that it is more hawkish than expected, this will be reflected as dollar strength, and I want to see a break above the 97 and at least a retest of these candle highs moving up to the 97.7, or even if we touch the 98, this could be possible. This is scenario number one. Scenario number two, if we have more dovish signals, maybe the Feds will be cutting interest rates more than 2 times this year or faster than expected, or why these members voted that they want to see interest rate cut. Are they fearing of any bad economic data, labor market data, any dovish signal? This could be reflected negatively on the US dollar, and a break below the 96.4, even retesting the 96 and digging lower to the next area of interest, which is the 95.4. This is the scenario I will be looking for in the US dollar. The final scenario and the least preferable scenario for us, what if the FOMC minutes didn't bring us anything new? In this case, I believe the dollar index will not have a clear direction. It will just keep consolidating like this, waiting for the new fundamental catalyst in order to take a certain direction. So guys, that's it for our episode for today. Hopefully you enjoyed it, and we will see you soon. Thank you so much for joining.